We got 20 seconds until consumer sentiment comes out. And I feel like we should just wait for that number, because if it's a hot one, market's going to have another thing to contend with here. And we are at the lows, close to them after a little bit of some dip buying action following that first sell-off, but we haven't gotten too far.
Has good news become bad for equity markets at this point?
Kind of looks like it.
The jobs data, yeah. Now they're pushing out that first rate cut maybe to September now, and maybe we're only going to get one.
I read October this morning.
Yeah. So, expectations, good jobs report, bad for markets. We'll see if this consumer sentiment number is the same reflection there for equity markets.
Inflation expectations came in pretty warm. The top line number at 73.2 is a little bit lower than the 74 expected. I don't think that's going to move the needle so much. Current conditions came in at 77.9, but the inflation expectations, probably combined with current conditions, make this a hot print on the inflation side, because in expectations, we know the Fed is keen to watch. And so fresh lows of the day there, tick down for stocks and tick down for bonds. As Alex and I were talking about earlier, though, bonds did rally back a decent amount since 7:30 because stocks got hit. But now if bonds start selling off while stocks are down, then things could get ugly.
It's not surprising that you're seeing those inflation expectations, whether it's on a 1-year, 5-year basis, start to go up.
Yeah,
because the data is reflective of that.
Everybody sees it around them.
Yeah, and that's going to continue to move, yields up, and everybody's talking about 5% yield for that 10-year, and maybe we're on that tractor beam to that level because the data's better, but inflation's still hot. Wages still going up 3.9% year-over-year basis. People are still out there spending, so the economy's doing well. But I think at some point these higher yields, this higher dollar, are really going to negatively affect the economy. But we haven't seen it yet.
Yeah, there's a feedback loop for sure. But until the Fed has to start actively slowing things down again. But here's what's interesting to me is we've gotten the steepening in the yield curve, but today it's a little bit closer, where we might be getting we're getting a tiny bit of contraction in the 10s to the 2s. Not a lot, but you did see the 2-year pop this morning alongside the 10s. So we'll see how the response goes throughout the rest of the session. But I'm watching Bitcoin right now up 2%. Kind of looks a little bit out of whack. Looks to me like if stocks are going to make fresh lows, which they are. Nasdaq's down almost 2%.
Yeah.
Bitcoin's likely to come off, I would think. Dollar's up now 2/3 in the index and 0.5%, so it's bouncing back too.
Yeah.
But the dollar got to 109, spot 8 earlier.
Yeah, we're going to hit 110. And you start hitting these numbers, Oliver, whether it's 5% for the 10-year yield, 110 for the dollar against the basket of currencies, that starts to matter a little bit. That starts to get in the psyche of maybe the traders out there, and that's why you're seeing the pressure with S&P 500 down 1.6% right now.
Yeah, well, that's what happens when you're already down, and then you throw a little bit of gasoline onto the fire with this number. Inflation expectations, that's kind of one of those things where they start to inform decision making, and then you get into a little bit of that feedback loop of sticky inflation. It's not like we're in the 70s where it's ramping back up. But I think all of this data tells us pretty clearly that we shouldn't expect prices to go down anytime soon.
Yeah, you look at the ISM services data from earlier this week. Prices paid, that was the highest since, June of 2023 on the ramp up there. So prices are still continuing to go up. Is just when does that actually hurt the consumer? You're going to have the 30-year mortgage rate above 7% again. It was just below it at 6.99%. So the housing market's not going to take off anytime soon. We've seen that reflected in mortgage applications on a week-over-week basis. But this is going to really start to come into play here. I think these higher yields, as consumer debt's still at record levels also.
All right.